Hello everyone. In this video, I'll be explaining you the top 20 most important journal entries that you can refer for your exams or interviews. After this video, I will try to create ledgers out of these journals in a new video, post which a new video on trial balance will be uploaded, and ultimately I will try to create financial statements, that is your balance sheet and P&L, out of these journal entries. So the entire thing will be linked to each other so that you can get a clear picture of how the journal entries are recorded, how they are moved to ledgers, and how you can fetch the trial balance out of it, ultimately your final accounts. So the first video uploaded in this channel was for accounting cycle. Now each and every step of that accounting cycle will be explained through these videos. We will start with the definition of journal entries first. What are journal entries? Journal entries are made basically to record the business transactions in a chronological manner. Journal entries come in the first stage of the accounting cycle. You can refer the first video as I said before. They are the building blocks of any financial statements. Until unless you do not record the journal entries, nothing can start in your accounting cycle. What are the various types of journal entries? The first one, general entries. These are the most common and normal entries that you see in your day-to-day life. For example, the purchase entry, the sales entry, cash deposited into bank entries, capital introduced into the business entries. So these are the most common ones. The second one, adjustment entries. Adjustment entries are journal entries usually made at the end of an accounting period to allocate the income and expenditure to the period in which they actually occurred. For example, depreciation. You buy an asset, the life of which is 10 years, but you have to allocate the depreciation for that particular asset to all of those 10 years so that the expense can be booked on a standard basis for all those 10 years. Compound entries. Compound entries are the complex entries where a journal can have more than two lines. For example, you are paying salaries as well as rent in one single transaction. So there will be two debits, salary account debit, wages account debit, and you are paying it for cash, so cash account credit. So it has three entries, three lines of entry. So they can be called as compound entries. And lastly, reversing entries. Reversing entries are basically those entries which have to be reversed out in the beginning of the next year. For example, accrued expenses. You are recording some expenses in the current year because it belongs to the current year, but they are not yet due. So when they get due, it gets reversed out in the next year. We have an example for this reversing entries, the compound entries, the adjustment entries, all of these we have when we go into the practical section of this video. So before going to the practical examples where we will be discussing those 20 journals which I promised at the beginning of this video, let's see how those journals will be recorded and the format in which they generally are entered. So basically, it can have at least four columns: date, particulars, debit, and credit. Date, as I said, journals will be recorded chronologically, so for that, the date column is important. Particulars, the accounts which are debited or credited will be mentioned. Debit and credit, so any amount which is debited will be entered in the debit column. Anything which gets credited will be accordingly written in the credit column. Now, what is this column in the middle? Ledger folio. Ledger folio is the page number of the ledger account on which the relevant account appears. All entries from the journals are posted in the ledger accounts. This page number or the folio number of the ledger account where the posting has been made is recorded in the LF column of the journal. Let's have a quick recap of the debits and credits rule. We have already discussed this in one of our videos. I will put the video link in the description box. You can go and check that out. But still, before moving to the journal entries, it's important that you know what are the rules of debits and credits. So let's start with the assets, expenses, and losses. You have to learn by heart. Assets, expenses, and losses. If they increase, they will always be debit. If they decrease, they will always be credit. Similarly, for liabilities and equity, income and profits, if they increase, they will always be credited. And if they decrease, they will always be debited. So this rule will be followed blindly for all the journal entries that we'll be going through, and they are followed everywhere all over the world. Now comes the most important and interesting. Now comes the most interesting part of this video, the practical examples, those 20 journals that I promised. Let's start with it. All the financial transactions are recorded here in this column, and then we'll be using the spreadsheet to record all the journals here. So the line items will be here, the accounts, and the figures which are getting debited or credited will be recorded here. Date, I've tried to follow the same format that I showed you, but I won't write any date here because there are no dates mentioned for this transaction. But when you have to record it, you definitely have to give the dates here. So let's start with the first transaction. Here it says capital of 100 millions introduced into the business in cash. So there are two sides here, capital and cash. Cash is increasing as well as capital. Cash is asset account. So as per the rules, any asset account, if it increases, should be debited. So let me first write cash account, and the debit is for 100 millions. All the figures that I'm writing here will be in millions, so I won't write the entire figure. I'll just write 100. Now capital should be credited because there's an increase in capital of 100 millions. But it seems this transaction has something more involved in it. Also, a furniture worth 25 million is introduced. So, along with the cash capital, there is a furniture also introduced by the owner of the bills into the business. So that furniture being an asset, and since it is being introduced into the business, there is an increase in furniture. So furniture again debited just the way cash was debited for 25, and capital will be increased. Ultimately, do not forget to write the narration for journals. Otherwise, this will be counted as a miss if you do it in your exams. Being capital introduced in the form of cash and furniture. Let's move to the next transaction here. Purchase of goods worth 25 million has been made. 10 million will be paid after a month. So basically 15 million has been paid right now, but 10 million will be paid in the next month. So here purchase of goods is an expense for us. So purchase will be debited. Any increase in expense will always be a debit. So purchase account, the debit is for 25, and what are you paying for the purchase? You're paying 15 million in cash. So cash will be credited. Also 10 million is due. So there's an increase in liability. So we'll have to credit the liability as there's an increase in liability. Accounts payable is generally used for creditors. So we can also write it as, instead of to accounts payable, we can write it as creditors also. Do not forget to write the narration. Even if it is small, you should have to write that. The next transaction is sales made for 50 million, out of which 10 million is due. So if you remember, we had gone through a topic called types of journal entries, and the first one was journal entries. So we can call all of these first three entries as journal entries. Here the transaction is sales made for 50 million, out of which 10 million is due. So sales is an income for you. Increase in income means a credit. So your sales will be credited for 50, and you are getting cash in return. So there's an increase in asset. So cash will be debited here, but that will be for 40. The balance 10 is due. So since you will be receiving this money in future, it is an asset for you. So you have to balance amount. Narration, of course. I'm not writing the narration for all of the journals, but whenever you do yourself, do write the narrations. Next entry. So here 10 million was due. I think there's a mistake here. Here, bad debt of 10 million has been written, but since the due is only of 10 million, so let me just update the transaction. Here I made the bad debt of 2 million instead of 20 million because the due was 10 million. So 10 million was due here, out of which there has been a bad debt of 2 million. The debtors did not give you money. So for that, you have to record the loss here, and loss, instead of writing loss, the better term in accounting is called bad debt account. So loss, there is an increase in your losses. So increase in loss means debit. So here 2 will be debited. So bad debt, you have, for this entry you have to credit your debtor account. Here you have to credit the debtor account because the dues are not received from the debtors which were expected to have been received. Here you could have also credited provisions if provisions would have been created earlier against it. Now why this debtor account has been credited? Because the debtor here was 10, which was a debit, out of which 2, now we are sure that 2 we won't receive. So here debtor was debited because there was an increase in debtor. Now 2 is reduced from this debtor, so I have to credit it. Narration, again I'm not writing it. Next transaction, salaries and wages paid for the month in cash for 10 million. So both salary and wages are expenses for your business, and since there is an increase in expense, it will be debited. So salary and wages account will be debited, and you're paying it in the form of cash, so your cash will be credited with 10 million. So the next transaction here is rent due for the month for 2 million. Let you, but the rent will have to be booked because the month is already closed. The rent will be due after, let's say, 2 months, which falls in the next year. So here, rent being an expense, and there's an increase in expense will be debited, and credit will do it to accrued expense. So this is an example of the accrual entry that explained in the type of journal entries. Here this means this rent account being an expense is already recorded for the month, but since the amount is not due yet, so it will have to be reversed out in the next period. So since the rent has been recorded to accrued expense, it will have to be reversed at the beginning of the first period of next year. Next entry, depreciation has to be recorded for 5 million. Depreciation being an expense account will be debited to, if there is an accumulated depreciation provision already created, then the same account will be credited. Otherwise, even the furniture account can be credited. So right now I'm assuming there is no such provision account created, so I'm crediting the furniture account because there is a decrease in the value of the asset. Petty cash kept aside for 2 million. So petty cash are kept aside generally for the small day-to-day activities for which you might require some cash. So here there's an increase in one asset account, which is petty cash account. So it will be debited, and the other side account. So decrease in cash decrease in asset will be credited here. Next entry, bank service charge and office supplies expense for 1 million each. So this is an example of compound entry. Bank service charge will be debited, being an expense. Office supplies will also be debited, and credit will be cash. Let's assume that it has been paid for cash. So since you can see there are more than one debit or credit here, so basically it has three lines, so it can be called as compound entry. Next is a fixed asset purchase. So there is an increase in asset in the form of computer. So the computer account will be debited, and let's assume that we are buying it for cash. So cash will be credited. Furniture decommissioned for 10 million. So furniture, here we are decommissioning it. So furniture will be credited as there's a decrease in furniture, which is an asset. And what was the book value of the furniture? Furniture was introduced at 25 million, out of which depreciation has already been recorded for 5 million. So 25 minus 5, the book value, the net value of the furniture is right now 20. And now the furniture is being sold for decommissioned for 10 million. So there's an increase in cash of 10. That's why it's a debit. Now the difference between 10 and 20 here is again 10 million, which is a loss. So the value should have been 20, but we are getting 10. So 10 is a loss here. So increase in loss will be debited, and here I will write the account. Loan of 5 million taken from bank. So loan being a liability will be credited as there's an increase in liability, and there's an increase in your bank balance, which is an asset account. So here wherever I will use cash, in place of them bank account can also be used. Goods worth 1 million lost in fire. So there's a decrease in your inventory, so I'm crediting purchase here, as the purchase was debited when there was an increase in your stock. And there's a loss of 1 million, so I will just write it as loss in stock due to fire account. So this being a loss, increase in loss, it will be debited. Goods worth 1 million given to charity. So charity is an expense for your business. So charity will be debited as there's an increase in it. It will be debited, and your purchase will be credited as your stock is getting reduced. Your purchases were your expense account, so whenever there was an increase it was debited. Now since there's a decrease in your purchase, your stock, so it is getting credited. The next example, goods worth 2 million used for personal purpose. So the owner is taking the goods that he purchased for his own use. So here there's a drawings to purchase being your expense, and there's a decrease in your purchases, so it will be credited. And declared for 2 million from business. So dividend is declared, but it is not being paid here. So that means that there is an increase in liability for you. So it will be called as dividend payable to. And where will you be paying your dividends from? It will be your retained earnings. So basically your profits which you have retained in your business. From there, you have to pay your dividends to your shareholders. Now, your profits, since there's a decrease in your accumulated profits, so it will be debited. Now, your dividend is being paid. So, the dividend payable, which was credited earlier, will have to be reversed out by debiting it. Assume that it is being paid through your bank. So bank being your asset account, it will be credited. And finally, the last entry of this video, payment made to creditors. There is no amount mentioned here, but let's try to check how much was due from creditors, due to creditors. So here there was a purchase made for 25 million, out of which 10 was due. So that's 10 is being now paid. Let's go to the transaction and record it, pay of the creditors. So your creditors being a liability account and there is a decrease in it, so it will be debited. And you are paying from a bank, so if there is a decrease in your bank, it will be credited. So the entire mantra that I've used here is I have to blindly follow the rules of debit and credit. In case you need any help with any complex journal entry, do let me know in the comment box and I'll be happy to help you. Do like and subscribe for more such interesting videos. Thank you.